You make no friends in the pits and you take no prisoners. 1 minute you're up 500,000 in soybeans and the next, boom, your kids don't go to college and they've repossessed your Bentley. Are you with me?
The revolution starts now.
We have to pass the bill so that you can find out what is in it.
Turn those machines back on!
You are about to enter the Peter Schiff Show.
Show me the money!
If we lose freedom here, there's no place to escape to. This is the last stand on earth.
The Peter Schiff Show is on.
I don't know when they decided that they wanted to make a virtue out of selfishness.
Your money, your stories, your freedom. The Peter Schiff Show.
Well, the air continues to come out of the Bitcoin crypto bubble. And, I talked about it on last week's podcast. In fact, the title of the podcast was about the crypto carnage. And that has continued, the bleeding, ever since that podcast. The bigger question is not just whether it's the crypto bubble that's popping, but whether or not this is a precursor for other bubbles to pop, because there are a lot of bubbles, right? We have a bubble in AI stocks, and I'll talk about that too this podcast. We got NVIDIA earnings out after the close today, but we have the AI bubble. There's a bubble in housing, which, the government is really trying to prevent from deflating, which, of course, they need to allow it to deflate, but they're afraid of what might happen. And we've got a bond market bubble. And of course, the Fed is going to try to keep the air from coming out of that too. We got bubbles everywhere. That is a consequence of the reckless monetary policy and fiscal policy that we've been pursuing as a nation for decades now. But going to the crypto bubble, Bitcoin bubble, which I think is smaller than the AI bubble as far as the size of it. But I think it's bigger than the dot-com bubble. And the dot-com bubble all by itself produced a pretty, not that bad a recession. It would have been a lot worse had the Fed not cut interest rates down to 1%, which was a big mistake. But even with the Fed coming to the rescue, we still had a recession, albeit a shallow one, that, began with the bursting of the dot-com bubble. And the crypto bubble is worse. And not just worse, but bigger, I think, as far as the amount of money. And it's not just the market cap of Bitcoin and the market cap of all the other, shit coins out there. Starting with Ethereum, all the way on down, right? All those meme coins, the Trump coin. But you take all those coins, but then all of the businesses that have developed, which are worse than any of the dot-coms that no longer exist. Remember, out of the dot-com bubble, we got Amazon, right? eBay is still around. Priceline, you don't really hear much about Priceline, but they're still in business. But 90 some odd percent of the dot-com companies that went public during the late 1990s went bankrupt in the early 2000s, right? So they went away. But of course, the internet itself, continued to grow and transform, American society in probably ways that were even bigger than people thought during, the heyday of the dot-com bubble. So the dot-com bubble was at least built on something real. And that's the same thing with the AI bubble. When I talk about an AI bubble, I am not saying that there isn't potential in artificial intelligence. In fact, I think there's tremendous potential. I think there's probably more potential there than in anything I've seen, which would include the internet, which had a lot of potential. I think that AI could be the most transformative invention as far as lifting the standard of living of all of humanity, to the extent that we can vastly expand our collective intelligence. And not only the ability to solve problems and do work that requires, thinking. But to the extent that we pair this with robotics and we have machines that can do skilled manual labor as well as unskilled, physical labor, if we could do that, if we could create an army of super intelligent, machines that could do all of our work for us better and faster and cheaper than we could do it ourselves, I mean, that's fantastic, because that means that people don't have to work anymore, that they can pursue other interests. They have more leisure. They can do things that they enjoy doing. We don't have to do all the grunt work anymore, all the tedious work, because we've got machines that can do that for us. So this could really have the potential to improve our lives, maybe elongate our lives. I mean, who knows what AI might discover that may have taken, normal human beings centuries to figure out. Maybe artificial intelligence will figure it out in years. So I think that there is something real in AI. I just think that there is a bubble in these stocks and in the way all of the investment in the data centers and all the infrastructure is being financed, and the way all these companies are loaning money to each other and buying each other's stocks and pumping this thing up. And nobody really talks about where all the money is coming from, right? In order to make this massive investment, right? What are we not doing, right? What areas of the economy are being starved so that we can feed AI? What is the short-term cost in order to get the long-term benefit? And we don't know how long we're going to be waiting for the AI investments to pay off. But in the meantime, what's going to give here? People are overlooking these consequences. But, before I even get to that, I want to circle back to what's going on in crypto and Bitcoin. So earlier this afternoon, Bitcoin traded below 88,500. Now, of course, that's still a ridiculously high price to pay for nothing, but it's about 30% below what you had to pay for nothing a couple of months ago. All right, so that is a pretty big bear market in nothing. Bitcoin down 30%. In terms of gold, which again is a better way to measure the price of Bitcoin, because after all, Bitcoin is marketed as being digital gold, as being an alternative to gold that is going to replace gold because it's better than gold. So measuring how it's doing relative to gold makes a lot more sense than just measuring how it's doing relative to dollars. And in terms of gold, Bitcoin was down 42% when it hit the lows. Now, it is rallying. And I think today's rally is another opportunity for people to get out. I think the catalyst for the rally is the NVIDIA earnings, and everything is rallying tech. The NASDAQ futures are up close to 2% on the back of NVIDIA. And, Bitcoin is a risk-on asset, and so it's going up. But what a lot of the, Bitcoin speculators don't realize is it's basically decoupled from risk-on assets. Maybe not, on a day-to-day basis. Some days it's correlated. But, earlier this afternoon, when Bitcoin was down near the lows, it was down over 5% on the year. 5%. The NASDAQ was still up 17%. So if the NASDAQ is up 17% and Bitcoin's down 5%, that's not much of a correlation. And so I don't think it really matters that AI stocks are rallying, because Bitcoin's got nothing to do with AI stocks. Yes, maybe NVIDIA beat earnings, but Bitcoin has no earnings. So it's irrelevant. But I think the money that is going into all things risk right now, that includes Bitcoin, I think by tomorrow, people will sell, even if they keep buying tech. But who knows? I mean, maybe we'll get a reversal in the tech stocks, buy the rumor, sell the fact. And that'll really weigh heavily on Bitcoin. But also, year to date, gold is up about, I think, 53 or 54%. And Bitcoin's down, was down 5%. And even after this big rally after hours, I mean, it's barely, it's flat on the year. Maybe it's up 1% now, because it's, several percentage points off the lows. We're trading back above 92, not back above 92,000. But a week ago, when I did this podcast, we were considerably higher than that, right? So we're breaking up. There are a lot of people that thought that Bitcoin would never go back below 100,000. And of course, I was watching this interview, and I think it was on CNBC, and I forget who we were talking to, and they basically said, well, look, sure, yeah, nobody expected Bitcoin would just hold 100,000 indefinitely. I mean, so this is nothing to worry about. I mean, Bitcoin is volatile. We all know that. And so it's not a big deal. And I'm like, what do you mean nobody expected it to hold 100,000? Everybody expected it to hold 100,000. I mean, there's hardly anybody in Bitcoin that believed that Bitcoin would be back below 100,000, especially when it was up at 126,000, a month or two ago. Nobody thought. I mean, obviously guys like me, right? But, we're skeptical. But the real Bitcoin community, they thought it would be 200,000 by now or 250,000. In fact, it was a year ago, November of 2024, that Bitcoin hit 100,000. And that's when they were popping the champagne corks at the Bitcoin 100,000 party. Do you think anybody who was at the parties that was getting drunk on $100,000 Bitcoin believed that a year later we would be lower, that Bitcoin would be over 10% below 100,000? Nobody expected it. To say, well, we all knew this was coming. No, you didn't. If people knew this was coming, they wouldn't have been buying it at 120,000 the way they were. So no, and certainly all of the Bitcoin pumpers that regularly appear on television, we're not warning people that, hey, why don't you hold off for a pullback, to buy it below 100,000. They were like, no, it's going to the moon. You got to buy it right now, right? So nobody really expected this, and I don't think we're anywhere near the bottom. Ethereum finally broke back below 3,000. It almost hit 5,000, or maybe it did, I forget, but it was near 5,000 a few months ago. And so now it's lost 40% in dollar terms since then. Now, on the NVIDIA news, it's bounced, and it's now back above, barely. I think it's around 3,030 or 40 or something like that. But what's more significant than what's happening to the cryptocurrencies is what's happening to the stocks. And I've been talking about this on my podcast, and I've been warning about what's been happening. These stocks have been obliterated over the last several months, and that continued today. Where stocks are down 70, 80, 90%. These are, anything that is related to Bitcoin. So you've got exchanges, where Bitcoin is traded, and then you've got these Bitcoin treasury companies where they just buy Bitcoin, right? That's their business, right? They're in the business of buying Bitcoin. I mean, what the hell kind of business is that? I mean, anybody can buy Bitcoin. I don't need a corporation to buy my Bitcoin for me. In fact, it defeats the only supposed good thing about Bitcoin is that you don't need a third party. You can self-custody, right? You own your own Bitcoin. What's the point of paying a company to buy something that you could buy on your own that costs nothing to store, right? But this became this asinine business that was, spearheaded by Michael Saylor, MicroStrategy, or now Strategy, excuse me, although they should have just changed the name to Micro, because that's what the stock is going to be. It's going to be Micro. But he pioneered it, and then you had all these copycat companies. The one that's down the most is that one Nakamoto that just came out over the summer. They kind of premiered it when I was at the Bitcoin conference, and the stock was over $30. It hit a new 52-week low today of 52 cents. So the stock's gone from $31 in May of this year. So in about 6 months, $31 to 52 cents, right? Now, of course, that's probably, the worst of the bunch as far as the percentage decline, right? That's but 99%. I don't know. I didn't do the math, but it's practically zeroed out. But all of these stocks have been getting slaughtered. But MicroStrategy is actually down a lot less than most. And it's still down, or was down today, because it was down about 10% today. MicroStrategy stock closed down almost 10%, 186.5. And the 52-week high was 543. That was a year ago in November, late November. The stock is down 65%. And that's one of the best performing of the crypto stocks, because it's only down 65%, because most are down more, right, than 65%. But it ain't over. This stock is going a lot lower. I mean, year to date, I think the decline is a lot less because it's sold off quite a bit going into the end of the year. So I think it's only off about 35% during this calendar year, right? But I think this thing is going to completely collapse, because the whole thing, I believe, the whole business is a fraud. But MicroStrategy has been one of the main reasons that Bitcoin has rallied, because of all the Bitcoin that MicroStrategy purchased over the years. So it's a fraud, but it's keeping the whole Bitcoin, pyramid from collapsing. In fact, I'm scrolling on Michael Saylor's X account now to see the exact amount of Bitcoin. So they're holding on to. He's already down in 1 week. He's already down 10% on that money. And I'm sure he's buying more this week, yet Bitcoin continues to fall despite the fact that Michael Saylor continues to buy. And of course, if he wasn't buying, who knows how much lower Bitcoin would be right now without that buying. But I think that at some point, he's going to start to sell, because the real key is their ability to finance this Ponzi. Because right now, the stock is barely trading at a premium to the value of its Bitcoin. At one point, it was trading at a substantial premium. And that was the secret to the Bitcoin yield, which was never a real yield. I mean, to call it a yield, I think, is a borderline fraudulent statement. And I think all of the debt that he has issued, these preferred, I think they're all kind of frauds. But MicroStrategy doesn't have a yield, right? All it does is it's able to sell stock at a premium, which means it's selling stock above the value of its Bitcoin and then taking the money it gets and buying Bitcoin. And so if it's selling stock for, let's say, 50% more than the price of Bitcoin, it can then take that extra $50 and buy a lot more Bitcoin. So the amount of Bitcoin per share goes up, so long as people are dumb enough to pay $1.50 to buy $1 worth of Bitcoin. Because really all MicroStrategy is a levered ETF. I mean, the software business is inconsequential. I don't even think there's really much of a business that's even left there. So their only business is being a Bitcoin's treasury company, which isn't even a business. It's a business that shouldn't even exist, and it won't exist, because every one of these companies that was started to be a Bitcoin treasury company is going to go out of business, because we don't need Bitcoin treasury companies. It's a business that satisfies nothing, right? There's nobody out there that needs one of these companies. You can either buy Bitcoin yourself, or if for some reason you can't figure out how to buy Bitcoin yourself, just buy an ETF, right? And they trade at NAV. Why would anybody overpay for Bitcoin? Now, they did it because they thought, well, everybody else would overpay for it, and it would just perpetuate this bubble like MicroStrategy had. Everybody copycatted what he was doing. Well, now the air is coming out of that bubble. And when MicroStrategy trades at a discount, right, the party's over, because now it is impossible for MicroStrategy to generate a positive Bitcoin yield. Because if Strategy shares are trading at a discount, which is exactly what happened to the Grayscale Bitcoin Trust before it became open-ended. But when MicroStrategy shares are at a discount, it can't sell any more stock, because if it sold stock at a discount, it would have a negative Bitcoin yield. So to have a zero yield, it can no longer sell stock. Well, if MicroStrategy can no longer sell stock, its Bitcoin buying days are over, which means the biggest Bitcoin buyer is sidelined. But the question is, how long before it has to start selling? Because it has interest that it has to pay on the convertibles that it sold. And all those convertibles are underwater, meaning that nobody who owns them is going to convert to MicroStrategy stock. They're all going to want their money back. Where the hell is MicroStrategy going to get the money? It doesn't have any money. It just has Bitcoin. Now, also, they've been issuing these preferred shares. The market for these preferred shares is going to dry up. And the buyers for the preferred shares have been yield-oriented funds that buy strategy preferred because of an 8 to 10% yield. But the yield is a fraud because A, it's paid in stock, but B, strategy doesn't have to pay anything unless it declares a dividend. And if it doesn't declare it, you get nothing. And they can go for years. They can stop paying and never pay. There's no penalty. There's no accumulation. So if strategy just doesn't declare a dividend and the year goes by, then that's it. You lose it. The only way that the preferreds are going to get dividends in the future is if they declare a dividend on the common. But they're never going to declare a dividend on the common because where are they going to dividend out? They don't have any income. They just have losses. So they're never going to pay a dividend, which means these preferreds are never going to really pay, which means the funds that own them are going to sell them. That's why the preferreds, which also trade, there's a European one, but the one in the U.S. hit a 52-week low today. But the preferreds don't even give you real equity. You don't even own anything. You basically, when you buy MicroStrategy preferred, you have nothing. You don't own common stock. You have no right to convert to common stock. So you don't really participate in any real upstream other than your dividend, which they never have to pay. The only thing you've got going for you is you have a liquidation preference in bankruptcy, meaning that after all of MicroStrategy's creditors get paid, then the preferred shares get paid, assuming there's anything left over, which there probably won't be. And of course, the common shareholders are going to get completely wiped out. Anyway, we got a quick commercial break, so stick around. We're coming right back. Lately, it feels like everything costs more than it should. You budget for a home project or a car repair, and the final bill still surprises you. But here's the flip side. 72% of Americans actually overestimate the cost of life insurance. That means most people think protection is more expensive than it really is and end up going without it. Now, I talk a lot about protecting your wealth, but protecting your family starts with making sure they're covered if something happens to you. That's where Policy Genius comes in. Policy Genius isn't an insurance company. It's a marketplace, one that makes it simple to compare policies from America's top insurers and find coverage that fits your needs and your budget. They lay out all your options clearly, the coverage amounts, prices, terms. There's no guesswork, just clarity. With Policy Genius, real users have gotten 20-year, $2 million policies for just $53 a month. Life insurance is a form of financial planning, and Policy Genius is the country's top online marketplace for getting it done. They've earned thousands of 5-star reviews on Google and Trustpilot from people who found the right policy at the right price. Secure your family's future with Policy Genius. Head to policygenius.com/gold to compare life insurance quotes from top companies and see how much you could save. That's policygenius.com/gold. All right, so I'm talking about the air coming out of the crypto bubble, and maybe the pin is the collapse of MicroStrategy or strategy. I keep calling it by its old name, the collapse of strategy. By the way, I did put out a challenge to Michael Saylor. I mean, he's been ducking me for years. I've wanted to debate him about Bitcoin. And, he's refused every invitation to debate me. I mean, plenty have been offered. I've accepted them all. And he's turned them down. But I decided, since both of us are going to be at Blockchain Week in Dubai, right? I'm going there to have a debate with CZ, who, to his credit, has no problem debating me. And so he's hosting me at his conference so he can debate me. And the debate I'm going to have with CZ, which I think is around December 3rd or 4th, and it will be, streamed online. So if you can't make it to Dubai, you could watch it online. But the topic of my debate with CZ is going to be Bitcoin versus tokenized gold. This is the first time I've focused the debate on tokenized gold as opposed to just regular gold, physical gold. And obviously, I am going to be creating and launching at some point a token backed by gold. In fact, ironically, the one thing that might come out of the whole crypto bubble is tokenized gold, right? Gold may be the only real winner, right? Rather than killing gold, blockchain may have just given it a new lease on life by making gold even more efficient than it's ever been as a medium of exchange, making it more liquid, making it more divisible, making it more portable, right? All the characteristics that people think Bitcoin has that are better than gold are worthless without the underlying value of gold. But Bitcoin can have all of those characteristics, those improved characteristics, if you tokenize it. And again, you don't have to transfer physical gold to use gold as payments. Because when we were on the gold standard until 1971, nobody was handing each other bars of gold. We were transacting in paper dollars that were effectively IOUs for gold in the vault. We can do the same thing now with tokens, with digital tokens that are tokenized IOUs for gold that's sitting in a vault. Nobody has to actually go down to the vault and get the gold. The gold just has to be there, giving real value to the tokens, right, that represent ownership of that gold. So this is going to be my first real tokenized gold versus Bitcoin debate. And what everybody should be doing to support this effort is go to tgold.com, right? It's going to stand for tokenized gold, but right now it just stands for trade gold. And tgold.com will take you directly to the page of the website on Ship Gold, where you can open up your T-Gold account and start buying some gold and silver. This is not the gold and silver that we're going to ship to you in the form of coins and bars like we do at Ship Gold, but it's going to sit in your account, and you can buy more of it, you can trade it. But ultimately, this gold is going to get tokenized. You'll have the option. Right? I'm not going to automatically do it, but if you want to withdraw it in a token, that's what you're going to be able to do. And even before we do that, I'm going to, issue debit cards and then secured credit cards tied directly to your T-Gold account. And I am going to make it so the T-Gold can move around. So if you have an account and someone else has an account and, you want to invoice them, they can pay you for goods or services directly in gold, right? So you can earn gold, save gold, send gold, spend gold. You can use gold as money, which is the way it's supposed to be used. Yes, it's also supposed to be used, in jewelry, in consumer electronics, in medicine, in aerospace, in dentistry, and all the ways that gold is used. But we also need to be using it as money, because what we've been using instead of gold, fiat currencies, doesn't work very well. And one of the reasons it doesn't work is because it results in all of these bubbles that I've been talking about. But I'm going to debate CZ. So again, go to tgold.com and buy some gold and silver. Oh, by the way, gold continues to hold above 4,000, trading around 4,100. It's amazing that people talk about gold being in a correction when it's at 4,100. I mean, it only corrected from a level that it got to for like a day. We haven't spent hardly any time above 4,200. Maybe that was 1 or 2 days. That's it. I mean, gold is right near the highs as far as I'm concerned. Same with silver. Silver's at 51.5. Silver is trading above the double top that went from 1980 to 2011. This is a huge breakout. Don't talk about the silver correction because it's not at 54.40, which was the high. It's at 51.5. This is significant. We are now building a base where the support is the old resistance. How much better can it be? And then we're headed a lot higher. So you could buy silver at T-Gold as well. We have gold and silver, and you can open up your account very quickly. It's not a long, cumbersome process. And we're going to open up right now. We don't take credit cards yet and debit cards. All that's coming, right? That's all. I'm building it piece by piece, but I didn't want to wait until everything was ready to roll it out. I just want to start to get onboarding people, to start building up the ecosystem and letting people buy gold now. I mean, what if it takes me a year to finish this? By then, gold could be 5,000, 6,000. Silver could be 100. I don't want people to wait and then buy. Buy now, right? Because the longer you wait, the more expensive it's going to be. But so that's my debate with CZ. The debate I want to have with Michael Saylor, and the debate I challenged him to on X, was I want to debate the premise that strategy is a fraud, that the entire business model is a Ponzi, and that it's destined to collapse. Regardless of what happens to Bitcoin, this thing is going to collapse. Now, of course, if Bitcoin goes up, it could go on longer. But if Bitcoin tanks and doesn't recover, then this whole thing is going to completely implode. And eventually, MicroStrategy is going to have to sell this Bitcoin. Now, normally, right, when MicroStrategy or strategy stock, I keep making that same mistake, but when strategy is trading at a discount, let's say strategy shares are trading 20% below the value of the Bitcoin that they hold, because people start to appreciate the predicament that the company is in, right? Now, under normal circumstances, the company would say, well, let's sell some of our assets, right? If it was a closed-end fund trading at a discount, it could, in theory, close the discount by selling off assets. Now, normally the fund managers don't want to do that because that reduces their fees, right? Because they're charging a fee based on their AUM, and they don't want to cut their own fees, even if it means eliminating the discount. But that's how you eliminate a discount. Now, sometimes if a fund trades at a big enough discount, the arbitrage, the arbitrageurs will want to come in, buy up the fund so they can liquidate the assets and capture that discount. But MicroStrategy can't do that, because if strategy, I can't make the same mistake. If strategy sold its Bitcoin, right, so it could buy back shares, Bitcoin would collapse. Could you imagine? I mean, it's one thing for the biggest Bitcoin buyer to stop buying. But what happens when the biggest Bitcoin buyer becomes a seller? Look out. So this accident is going to happen. This thing is going to melt down. And that's why people are going to start running away from Bitcoin, from strategy. The whole story is just going to unravel. And I'm watching on, CNBC and Fox Business, and they're all talking about Bitcoin going down. And they're all like scratching their heads, like they're at a loss to explain like why it's happening. I mean, duh, it's a bubble. The air is coming out. What makes no sense is that it went up. That's the crazy thing. Not that it's coming down. Explain why it went up, right? These guys think it's real. They think there's an actual business model here. They think these currencies, Bitcoin actually has value. It's got no value. They still don't understand. They've been scammed. They've been scammed by their guests and all their advertisers and all the OGs and these big whales. They're laughing. They're laughing as they've been unloading all of their garbage, right, on the public. And of course, they got Donald Trump and his family into it and his administration, and that really helped pump it up so they could dump, right? That's why Bitcoin hasn't gone up. All the smart money's been dumping. They've been taking advantage of all this hype in order to unload their Bitcoin. Now, you've got a lot of weaker hands. You got a lot of speculators that own it. And, at some point, they're getting out, right? They're going to liquidate their ETFs. They're going to sell these shares. So I think that this could be the harbinger of other bubbles bursting, like the AI bubble. And we'll see, yes, the futures are way up now because, NVIDIA beat the earnings again, but we'll see if we get some selling tomorrow into this news. If what happened with Bitcoin and the loss of the speculative fever there, if it's got people worried in general about excesses and speculation. Now, again, at least NVIDIA has an actual business. MicroStrategy does not. Right? The whole thing is a fraud. That's why I want to debate a Saylor about it. But anyway, moving on. So a couple of other things. We got the minutes from the most recent FOMC meeting that came out today. Oh, and by the way, we also found out we're not going to get the October jobs report. We're supposed to get October's report, not November's. But I think they were supposed to release the October report on the first Monday of December. And then we would have had that report before the FOMC meeting, which is now a coin toss, right, as to whether or not the Fed's going to cut again. Well, the government came out today and said, we're not going to release it. I don't know if they're ever going to release it. Maybe the jobs reports are like the Epstein files, although apparently now they're going to release those, although I'm not really sure how much they're going to redact it. I mean, I'm going to talk about redactions at the end of the podcast when I talk about what I got from the IRS, my most recent FOIA production or their production and what I received from them. But, who knows what we're going to get with respect to this jobs report. But it ain't coming out before the FOMC meeting in December. But we got, a little taste of the meeting or what we're going to get in December from the minutes. And, there's a lot of disagreement at the Fed as to whether or not it's appropriate to cut rates again or leave them where they are. There is certainly some concern about weakness in the labor market. Now, the labor market is much weaker than the Fed is letting on or admitting to or knows. I don't know. But they are worried about it. And so there's no, unanimity in opinion. And so it's keeping people guessing from that respect. But I thought what was significant, and it should have produced a bigger reaction, but it did not, was that the FOMC members seem to believe that the inflation threat that they thought may have come from tariffs isn't there. And to the extent that prices are higher, that it's not, a permanent thing, that it's like a one and done situation. And of course, Trump has been rolling back more tariffs recently, a lot of items. And, ironically, of course, Trump and the Trump administration has to admit that we're taking away these tariffs because we're hoping that prices will go down, right? Because prices are rising, especially in a lot of these food products. And so they're eliminating the tariffs, which, again, is tantamount to an admission that tariffs make prices go up. Because if removing tariffs makes prices go down, well, then obviously imposing tariffs makes them go up, right? I mean, it can't be one without the other, right? And so it's an admission that Trump was lying the whole time when he told us that tariffs wouldn't make prices go up and that foreign producers would pay the tariffs. Clearly, they're not, right? They're not eating our tariffs. Farmers in South America aren't eating our tariffs. It's Americans who want to eat the products that are grown in South America and shipped up here. They have to eat the tariffs, right, along with the bananas or whatever else was the subject of tariffs. So I think because a lot of the tariffs are being removed too, maybe the Fed no longer is worried about tariff-induced inflation. Right, but the real threat to inflation never came from tariffs, right? Tariffs can exacerbate it, but the inflation is the monetary policy. The inflation is going to come from the fiscal policy. The Fed is ending quantitative tightening in December. The question is, when is it going to begin quantitative easing? I'm surprised they've held out this long. I thought they were going to start earlier. So I think they're going to start next year. It's pretty apparent that they're going to start doing that in 2026. And I think they're going to be responding not just to weakness in the labor market, that's going to continue to get worse, but the bond market, I think, is going to fall. And ultimately, the dollar, I'm a little surprised that the dollar has held up so well in the second half of 2025. I had expected it to be weaker. Now, it had a very weak first half, but the dollar has bounced back a bit. But I think it's going to roll over in 2026. And if it doesn't contribute to the problems that causes the Fed to go back to QE, it will certainly be a consequence of the Fed going back to QE. So, we'll see what they, what we actually get from the Fed. I still think that the Fed is under a lot of pressure to cut rates, and I think that the statements about the fact that, it looks like tariffs aren't really the threat, that may be partially the result of a lot of the pressure coming from the Trump administration to kind of look through these tariffs and to deliver rate cuts to the market to keep the air from coming out of these bubbles. And also the housing bubble. They're desperate for trying to find a solution there. Also, the healthcare bubble, right? Look at the price of healthcare. Again, the Democrats are acknowledging that we have a healthcare crisis. And it's affordability. They're saying prices are too high, premiums are too high. Yeah, but they promised that the Affordable Care Act was going to solve all that. That's why it was called the Affordable Care Act. The government promised to make healthcare more affordable. Instead, the government programs made it more expensive, which is exactly what is going to happen. And now the Trump administration is talking about, instead of the Obamacare subsidies that might go to the insurance companies, that he wants to just send more money to the people so they can go out and buy insurance directly rather than giving it to the insurance companies, which I guess is preferable. But the whole idea is, why don't you allow the people to keep more of their own money? Where is the government going to get this money to send to the people to buy health insurance? The government doesn't have it. The government has to print it. We're running a huge deficit. We'd have to borrow it. So you're going to create a lot more inflation in order to give people money to buy insurance. But the problem is, as long as insurance companies are not allowed to discriminate based on pre-existing conditions, why is a healthy American going to buy insurance? You give them money to buy insurance, you ain't spending it on insurance. The only people who are going to buy insurance are people who are already sick. And that's why it's so expensive. Because if you're already sick, you're not buying insurance, right? You're getting an insurance company to pay for your health care. Insurance companies are not supposed to pay for your health care. They're supposed to insure you in case you get sick. And then they pay for your health care because you got sick. But when they sold you the policy, you're supposed to be healthy, right? That's the only reason insurance could work, right? Healthy people buy it, and insurance companies are willing to sell insurance to healthy people. If you're already really sick, right? I mean, that's like selling in fire insurance when the house is already on fire, right? If somebody is standing, in the middle of a burning house and they're like, oh my God, I got to go buy myself some fire insurance. And you call up an insurance company, I want to buy fire insurance, and say, well, what's the situation? Well, my house is on fire right now, and I need insurance bad. I mean, who's gonna write that policy? It's a guaranteed loser. The reason that insurance companies sell you fire insurance is because your house is probably not going to burn down, right? There's a slim potential that your house is going to burn down. So they'll take that. They'll take the action. Now, yes, some houses will burn down, but most of them won't. And so the reason that fire insurance works is because the insurance companies collect all this money from houses that never burn down, from people who own houses that never burn down. That gives them the money. So the few houses that do burn down, they got them covered. Now, of course, if there's a major wildfire and a lot of houses burn down, they could be in trouble, which is why a lot of these insurance companies have reinsurance and stuff like that in case of a catastrophic fire, right? That's not just a one-off thing where one house burns down, where an entire neighborhood burns down, right? Then the insurance companies could have a problem. But under normal circumstances, enough houses don't burn down that the insurance companies could cover the ones that do. Healthcare works the same way, right? Health insurance companies are hoping that the people don't get sick. And of course, the people who are buying health insurance, they don't want to get sick either, right? So ideally, when you buy health insurance, you hope you never use it. And the insurance company who's selling it to you, they hope you never use it either, right? So you're buying something that you hope is a complete waste of money. Because if your insurance is a waste of money, that means you didn't get sick. That means you're healthy, right? And I'd rather be healthy, right? I don't want to collect on my insurance, health insurance. I want to be healthy, right? I buy the insurance just in case. But we're trying to turn insurance into just paying for your health care when you're already sick. So unless they want to go after that, that was a big problem with Obamacare. And even Trump was afraid to touch, that by saying, no, we can't prevent insurance companies from discriminating against pre-existing conditions because that's how insurance works. Insurance is about discrimination, right? And you have to price insurance to reflect the risk, right? That's why young teenage boys are very expensive when you want to buy them auto insurance. Why? Because they tend to get into a lot of accidents, right? They're just learning how to drive and they're young boys and, they get into accidents, right? So you want to buy insurance for a 17-year-old boy, right? It's a lot more expensive than buying it for a 35-year-old woman, right? Obviously. But if, they passed a law that says, well, no, insurance companies can't discriminate on age or sex or, your driving record, how many accidents you've had, right? If they have to just give everybody the same terms, well, then everybody's going to pay very high insurance. And now the good drivers won't even buy it. They're like, shit, why should I buy insurance? I'm a safe driver. It's so expensive. I'll just take my chances. The only people who are going to want to buy insurance are the people who are really reckless drivers. Well, now the auto insurance industry won't work, right? They don't work if they get government subsidies now. That's what the government does. They come in and they screw up an industry, and now it needs government subsidies to survive because it's no longer a free market. So unless Donald Trump, solves that problem, which he won't touch, the plan that he's talking about right now ain't going to work either. Apart from the fact that we don't have the money, it's not going to work until you reform insurance. You have to take away all that crap from Obamacare. And even Trump, when he promised to get rid of Obamacare, said, but we're going to leave the laws that say that health insurance companies can't discriminate based on pre-existing conditions, right? Which, of course, that sounds great. Oh, yeah, why should somebody with cancer, not be able to get insurance? Well, they should have bought it before they got cancer. And I feel bad that somebody has cancer and doesn't have insurance, but we can't force an insurance company to sell them a policy. We have to have another solution. And part of the problem, one of the reasons that so many people find themselves without insurance is because insurance is tied to employment. And the government did that through the tax code, right? Before the government, allowed people to get tax-free insurance from their employers, most people bought their own insurance. And so when you lost your job, you didn't also lose your health insurance. So the government created that in addition to making insurance expensive. But I don't have that much time. I'm getting to the end of this podcast, and I wanted to talk about the latest production from the government through my FOIA lawsuit. Remember, I got 2 lawsuits against the IRS and a bunch of other people. The civil rights lawsuit is taking forever. I mean, it's been, 6 months or more since the motions to dismiss. The judge hasn't even ruled. So I don't know what's going on there. But my FOIA lawsuit is still taking forever. And that was on hold for a while because the government shut down. But I just got more documents from the IRS, more than 2 years after I requested them. Now, they're supposed to give me these documents, I forget, 20 days, 30 days, right? The reason I filed my FOIA lawsuit against the IRS was because they're breaking the FOIA law. They're not giving me all the documents they have. And I know that because since I sued them, I've gotten hundreds and hundreds of additional pages that they claimed they didn't have before I sued them, right? So obviously they lied because they can't give me all this information because before they did, they told me, we don't have any more information. You got everything, right? So that was a lie. But the other reason that I am suing them is because 90% of what they're giving me is illegally redacted, right? They are redacting everything, entire pages, not, which you can't do. And all of the objections which they have given don't apply. It's a complete lie. But even the little bit of stuff that they don't redact is so damaging, right? It blows, them up. It completely proves my case. And I can only imagine if the stuff they're letting me see is this bad, I can only imagine what's been redacted, right? Because they're only redacting this stuff to cover their own asses. They want to cover up their criminal wrongdoing, which you're not allowed to do, right? The purpose of the Freedom of Information Act is so transparency. I can see when the IRS or any government is doing something unlawful, right? You can't cover it up and say, well, there's an investigation. See, one of the big things is they're claiming that I can't see this information because it relates to an investigation. Now, if it was an ongoing investigation, and if the information they're showing me could compromise that ongoing investigation, they'd have a point. But the investigation of me and my bank has been closed for years, and it found nothing. There were no indictments. So what's the problem? Why can't they release information that relates to a closed investigation that uncovered no evidence of wrongdoing? That's what they don't want to expose. The fact that the investigation found nothing wrong, that the bank didn't do anything wrong, that it was the government. They're using the pretense that the information relates to an investigation to hide their covering up of the results, and more importantly, their PR campaign to turn a failed investigation into a fake success. And the documents that I got on Friday, right, prove it. Even though I already got documents that proved it, I got more documents that prove it again. So you gotta read this stuff. So you see, I'm not making it up. But I have a website, 9fraud.com. So go there, right? 9fraud, either the number 9 or write 9. And it's 9 because of 9 Entertainment in Australia, right? I sued those guys and I won my lawsuit. And I started out just using this website to expose Nick McKenzie, Charlie Grieve, 60 Minutes Australia for the frauds and liars that they are, right? So that's where it started. But then as I started getting all this FOIA evidence, I started putting it up on that website. So you can see all the FOIA evidence. But the most recent one, and you go to evidence, exhibits, click on exhibits. And this is in even more FOIA evidence, right? I've got 4 separate postings of this FOIA evidence. And so one of the most interesting things about it is if you go back and watch the press conference from when my bank was closed, and you can see that on my YouTube channel, or just Google Euro Pacific Bank OSIF, right? You'll see the press conference. Jim Lee, who was the head of the IRS at the time, said that the action against the bank, the investigation, the press conference, all this, it was all OSIF working on its own, that the IRS had nothing to do with it, right? Well, a lot of the emails that were going back and forth among IRS agents 2.5, 3 months before the emergency press conference, right? And because they knew they were going to shut down my bank for 3 months, and then they shut it down on the pretense of emergency. But obviously it wasn't an emergency, or they would have shut it down 3 months earlier. They wouldn't have just waited to get all their PR stuff going if there was a legitimate emergency. If customers' accounts were really at risk, they couldn't have waited so long. But the subject of all these emails is OSIF partnership press conference. So they're actually referring to a partnership with OSIF. Well, if it's a partnership, then clearly OSIF did not act alone, right? They had a partner, and the partner was the IRS. And the IRS had a bunch of partners because they had the J5. Also, there was an internal J5 publication, right? Like their own in-house magazine, in which they referred to their disruption of my bank as a key milestone, right? And they admitted that they disrupted my bank. But why did they do anything? They said that OSIF did it, and OSIF said that the bank was shut down because it was critically insolvent, which was a lie. But if the Atlanta's investigation found no evidence of money laundering or tax evasion, then why did they disrupt my bank? What was the purpose of disrupting it if the bank didn't do anything wrong? I mean, if the bank did do something wrong, they would have, indicted somebody. They never indicted anybody. Not only did they never indict anybody who worked at the bank, nobody who banked at the bank. None of the customers have been indicted. Nobody has been nothing has happened to anybody because nobody was doing anything wrong except the government officials who were investigating it. But they admitted in their own documents that they disrupted the bank, and it was a major milestone for them. Why? Because it gave them the publicity that they needed. And here is the proof that I got. So this guy, Justin Cole, who is one of the defendants in my lawsuit, he's the PR guy for the IRS CI, right? So he was the lead guy on trying to drum up publicity related to shutting down my bank and pretending that my bank was guilty of the very crimes that it was investigated for and exonerated of from the investigation, right? Tax evasion, money laundering. So after the bank gets shut down as a result of this partnership press conference that had been planned for months. Oh, and by the way, they again talked about the governor. The governor was supposed to speak at the press conference to shut down my bank. It was supposed to be held in the governor's office. I mean, here, you're shutting down a bank that's done nothing wrong. Nobody's been indicted, doesn't have a single American customer, doesn't have a single Puerto Rican customer. It's a small little bank, yet you need the governor of Puerto Rico? I mean, they've never even had a press conference in all the history of Puerto Rico to announce the closure of a bank. But they had to have one for my bank, and the governor had to be there. And they talked about other, areas of the Puerto Rican government that were involved. It wasn't just OSIF and the IRS. It was all kinds of government bodies. I mean, this was a major thing to shut down a bank that did nothing wrong. But again, it was all for publicity. So Justin Cole sends an email to Special Agent Sharpley. And the email, he attaches a Bloomberg article about the shutdown of the bank. And it was a horrible article because it basically was, PR for the IRS. The article was very flattering the IRS. The guy wrote about how great they were. I mean, how they were doing such a good job, in their, global policing, and how their hard work had resulted in the shutdown of my bank, and that my bank was facilitating tax evasion and money laundering, and they worked with these international tax chiefs, and they were able to shut down my bank and put an end to this money laundering and tax evasion. And this is a great example of how the IRS is working so well with other tax authorities. You could read the article because it's in the production, right? It's in, I have all the exhibits that the IRS gave me on 9 fraud, right? Just go there to more FOIA evidence, right? So, and it even, brought in Act 20 and 22, and the IRS wants to make sure that Puerto Rico doesn't become a haven for tax evaders, right? And so it's really negative about me and the bank, very positive about the IRS and the J5, right? It's great publicity, right? It's like a PR release that they wrote. So, he sends it, the PR guy sends it, and he sent it out. I kid you not. There were over 40 IRS agents copied on an email. 40 of them. I mean, why are 40 IRS agents needing to read this about the shutdown of my bank? A bank that did nothing wrong, had no U.S. customers, so there was no delinquent taxes by any of my customers. Yet over 40 individual IRS agents needed to be copied on this email, right, of my little bank. Anyway, so one of the agents, right, writes this guy Justin back, and here's what he wrote. I mean, I highlighted this. He writes, "Great article, great job, Justin. Your work on this has been fantastic! Exclamation point." Right? The focus of that article is exactly what we intended to do. great to see our plan realized. That's my whole case. That proves my whole case. He is basically saying that's exactly what we wanted. We wanted publicity like that. That's what we had hoped. We hoped that when Euro Pacific Bank got shut down, we would get the credit. And the newspapers would say that the bank was helping people evade taxes and launder money. So now we get credit for this huge bust of this major global tax evasion money laundering scheme when they didn't bust anything. There was no tax evasion or money laundering going on at my tiny bank, and they know that. They knew it. But the media didn't know that. They got the media to turn this failed investigation into this major success, and they're all getting credit. And he says it's great to see our plan realized. They planned this out. This is what they wanted to happen. The only reason my bank was shut down, it wasn't a regulatory emergency. It wasn't because we were violating any rules. It was because the IRS and the J5 were desperate for a public relations victory, especially since they leaked the investigation to the media, and then the media made a big deal about it. 60 Minutes Australia, The Age, the New York Times. So now they were like, oh my God, everybody knows about the investigation. We got to save face. There can't be nothing. We can't have nothing come out of this after they made such a big deal about how all these global super cops had found this bank that was helping all these organized criminals evade taxes. If the bank just continued business as usual, if nothing happened, that was going to be very embarrassing for the IRS. So they concocted this scheme to shut the bank down, to get the commissioner of OSIF to come up with a pretense to shut it down. So she pretended it was solvency, which was a laugh. But they made up a reason. They shut down the bank so that the shutdown could be used as a PR stunt for the IRS and the J5. And here you have the IRS admitting it. Now, if you look at the rest of the production, you'll see all this stuff redacted. God knows what's written there. Who knows? I got hundreds of pages of completely redacted stuff. I mean, I can imagine they confess to everything, right? It's all got to be there. All they have to do is unredact it, right? And legally, I mean, they're committing another crime. First of all, everything they did to my bank was a crime. But now they're covering up the crime, which is another crime, because they're violating more laws to cover up the fact that they violated other laws, right? Obstruction of justice, abuse of power, all kinds of stuff. It's amazing. Nobody in the Trump administration is actually interested in this, because I have all the proof that the government targeted me because of my politics and then, broke the law. I mean, they destroyed a business as a publicity stunt. Meanwhile, forget about the tens of millions of dollars I lost. I've got thousands of customers who haven't had their deposits in almost 3.5 years. Nobody has gotten a nickel out of that bank, right? Those are the collateral damage for this publicity stunt. Did they give a damn about me or my customers, my innocent customers who they know are honest, law-abiding people, right, who weren't evading taxes, who weren't laundering money? Because if they were, right, something would have happened. Somebody would have been charged. Nobody was, right? Believe me, they dug deeper than they probably ever dug before, right? They were desperate to find anything, and they found nothing. There's an old joke that says a grand jury can indict a ham sandwich. Right? That's how easy. Well, they tried for 2 or 3 years to indict anybody at my bank, and they couldn't even do that. So indicting somebody at my bank is harder than indicting a ham sandwich, right? They can indict a ham sandwich, but they couldn't indict me or anybody that worked at my bank because the bank didn't do anything wrong, and they knew it. But they had to pretend that the bank did something wrong so they can claim credit for this massive bust. Hey, we really blew this thing wide open, right? This is a good use of taxpayer money, right? We coordinated all around the world, and this is our only success, right? If you go look at the J5 and you you look at their publications where they brag, their most important success, their biggest enforcement success that they brag about is shutting down my bank. A bank that did nothing wrong, that helped nobody evade taxes or launder money, getting it shut down. Of course, they deny that they got it shut down because at the press conference, they claimed it was OSIF that shut it down. But OSIF only shut it down as a favor to the IRS. And I'm sure all of that, all of the, whatever the quid pro quo was, all of those discussions, I'm sure all that's been redacted. I'm sure there's stuff in there where, the commissioner says that, the bank's going to get sold and don't worry about it. And no, we don't want that. We got to shut it down. Oh, and I also found out in this production, I found out that the current commissioner of OSIF, who was the deputy commissioner, was also in on it because there's emails that refer to briefing the deputy commissioner. So she probably should have been sued too. She's now the commissioner. The other one is gone, but she was obviously involved because the documents, the emails reference having to brief her and having to bring her up to speed on this stuff. But anyway, just go to 9fraud.com if you haven't gone there and just look through all this FOIA evidence, and you can go through all the other FOIA evidence. And I have a little introduction to all of it, right? I write a little bit about what, some of the important stuff, and then you can go through and look at it. But then read everything else. I mean, I got all of the discovery evidence from my lawsuit, my winning defamation lawsuit against 60 Minutes, against The Age, against Nick McKenzie, against Charlotte Grieve. I won a judgment against all of them. They lost. They had no defense. They had to pay me damages that exceeded the statutory limit. They had to pay all of my legal costs on an indemnity basis. Yet no news outlet in Australia will report that they lost. Right? It's a huge cover-up. They're all like circling the wagons to protect themselves because the entire media out there is corrupt. Right? Even the so-called opposition. Right? Channel 7 is supposedly more conservative and Channel 9 is liberal. But even Channel 7 refused to report that 60 Minutes or 9 lost my defamation lawsuit. And again, the 60 Minutes broadcast that was ruled defamatory and was removed from the internet by court order, the journalist Charlotte Grieve won an award for Best Young Journalist of the Year for that broadcast. And it was excellence in journalism. The worst form of journalism is defamation. So Charlotte Grieve admitted that her broadcast that she won an award for was defamatory. Well, how can they not ask for that award back? How do you give out an award for an excellence in journalism and then find out that the whole thing was a fraud? Because the reason they gave her the award is because they thought that she exposed this, oh my God, Schiff is this huge criminal. His bank is helping hundreds of Australians launder money. That's great investigative journalism. It turns out I wasn't helping anybody in Australia evade taxes. They made it all up. In court, remember, they alleged that I helped hundreds of Australians evade taxes. They alleged that. In court, my attorney asked, name one Australian that this bank has helped evade taxes. They couldn't name one, let alone hundreds, right? So she should have lost that award. It was, a bank, City Bank Australia gave him that award. I wrote a couple of letters saying you got to take that award back, and of course they refused. So look through all this stuff on 9fraud. I spent a lot of time gathering all this information, so it's all there. And I've got the clips. I've got interviews. You can see how they took stuff out of context, how they misquoted people. All that evidence is there. Anyway, I've been talking for a long time. I didn't intend this podcast to be this long. So anyway, and again, too, we continue to come out with some great stuff at Schiff Sovereign newsletter. So subscribe if you, and we also, we're starting to get a lot more subscribers to our paid investment letter, Strategic Assets. We've uncovered some really unique investment opportunities there. So to get a look at the research, you should subscribe. That's a paid subscription. It's not expensive, and you can cancel whenever you want. There's a no questions asked, money back guarantee. So if you're not happy with the research, just stop the subscription. But it's another good way to augment what you're doing. And again, as I said earlier, go to tgold.com, buy some gold and silver, get into my mutual funds. I think the gold fund is getting ready to have another big move up. I think this correction is well overdone in gold stocks. I mean, they dumped them when they saw gold pulling back, but it didn't. It pulled back from a spike. I mean, we're above 4,000. We're above 50 in silver. This is a huge bull market. These stocks are still a steal. Your Pacific Gold Fund, EPGIX is the symbol. And again, I'm probably going to do an update on Friday on the Schiff Gold website. So if you're not a subscriber to the YouTube channel for Schiff Gold, go there. We'll see what happens over the next couple of days in the precious metals market, and I will wrap it up on the Schiff Gold Friday market wrap. Bye for now.